Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The week starts off with political update from Germany, where the conservative CDU bloc won the election by winning 28% of the votes and are likely to enter into a coalition to form government. The key narratives we carry forward from last week would be the bets on a Japanese rate hike, keeping the yen stronger, it's trading below the 150 mark against the dollar. On the other side, there are also some data showing some slowdown in the US economic activity. Good morning, JK. What would you be tracking this week and how are you reading the markets?
Good morning, Swaraj. So the German election is not just another election. It is, quite an important event geopolitically and for the rest of Europe as well. And the prospect of a coalition and stable government that's likely to be formed in the coming days is very important for various things. The leader, Mr. Merz, who is likely to be heading the government along in a coalition, has already stated that his first priority is to achieve unity in Europe. Other issues that will be looked forward to will be whether Germany gets into, or adopts the debt brake that they have been following for years. The fiscal deficit in Germany is pegged at 0.35%. I mean, just for a perspective, US runs a fiscal deficit of over 6%, and that will be opening a big purse of spending for the economy, which has been contracting for the last 2 years. It's a big thing that's likely to happen. Markets looking whether it will happen. Europe itself is facing a huge moment where the US support for its defense is to be withdrawn in the coming years, and therefore Europe will have to take care of itself. How it will, program for meeting these defense needs, and one of the ways in which it can happen is Germany, adopting the debt brake and and spending more on defense. These are likely, implications of the German elections, which will definitely have a very positive impact for Europe and the region. And that's the reason why markets have taken the result quite positively. You can see the euro also gaining 0.6% from the way level where it closed. I think it's a good thing. And along with that, what is happening is also that a lot of positivity on the Chinese markets that we have seen over the last few days. And I have we can see that right from September, the Hong Kong market, which is a proxy for the Chinese stock market, has already risen over 50%. And that's a very big shift that is happening from investors ever since the AI development in China that has been attracting new investments into the Chinese markets. Last week, Premier Xi also had a meeting with the private investors for the first time, and that has given a lot of confidence about the Chinese progress on the AI, and also how it can attract investors from other parts of the world. Now, while all this is happening, we are actually seeing a decline in, or rather, I would say, signs of a decline in the US exceptionalism. We have had a series of weak data from US, starting with the retail sales and industrial production in the previous week. In the week just passed by, we saw the the regional business activity in the Philadelphia region slump in a big way. On Friday, we saw the service PMI activity from US also drop very heavily, into a contraction territory for the first time in several months, several years rather. And as we know, the services is one of the big drivers of US growth, and that's something that cannot be missed. We also had the consumer sentiment final reading of Michigan survey, which was worse than the initial reading also. Consumer sentiment fell, and at the same time, we also had the outlook coming down, and the inflation outlook remaining high. So that's another negative, because higher price inflation along with the lower activity level means that you are probably getting into a stagflationary situation. This prospect of a slowdown in the US also will be assessed in the coming days when we have the of 2024. We also have the PC core inflation number, and I think every data from US is likely to be seen in the light of what's happening there in terms of the deportation of illegal immigrants, reducing the labor force, and then we have also had cut down in the government expenditure, freeze on employment, all these things which will probably lead to the consumption going down. In fact, this week, along with the PCE number, we'll also have the personal consumption number. Forecasts are for quite a big drop there. So consumption and government expenditure, which are a big part of the US GDP, are possibly taking a hit in the coming months, and that will actually remove the edge out of the US for in terms of their growth. And all these things were clearly reflected in the stock market in the US, last week, when we saw Dow Jones falling by over 2.5%, S&P 500 by about 1.7%, Nasdaq by 2.65%, and they still trade quite close to their all-time highs, even despite these fall. While as I was saying about China, the market is still trading, at 2018 levels, and that's where the investors seem to be shifting. We can see that the Chinese yuan also is remaining stable. The offshore yuan shows that it's stronger than the onshore yuan, which indicates that the overseas investors' money flowing into has started to flow into China in a big way. So we are seeing several shifts here. Europe possibly getting into prospect of a stronger move towards addressing their economic malaise. China becoming relatively more attractive to other regions. US possibly slowing down. Of course, we'll see look for more signs. Definitely, the policies are indicating towards that. So all this actually, and then of course we also have Japan, which is now suddenly shifted to a hawkish mode on their policy rates, having already raised rates 3 times to 0.5%, and now there are talks of more rate hikes in Japan. Although the Japanese authorities will try to guide the market in a very measured way, because the moment the yields in the Japanese 10-year shot up last week, there was a statement from Japanese authorities saying that if the yields rise too fast, they will come and buy the bonds as well. So overall, we are seeing a lot of shift in the various regions, and definitely a bit away from the US dollar. So that's already reflected in the US dollar index, which is now at 106.20, having clearly broken the 107 level. It is now targeting towards 105 on a technical basis. So I think euro and GBP, as well as the yen, all these three major currencies are expected to do well on the basis of what we have indicated. Now on the rupee. Last week we saw continued FI flows. Just for a day, we had one big inflow that was mainly on one-off basis, but otherwise, in general, FIs have been sellers of Indian stocks. Maybe the shift to Chinese market could be impacting the FI activity in India as well, and of course, the global markets falling. The US, led by the US fall, as I mentioned earlier. could also see the FIs taking a slightly uh, slower approach to Indian markets, though we are seeing a lot of correction that has happened, which could make many many of the segments of the market quite attractive. But I think it will be a very slow turn for the Indian market, because market is also still dealing with shortage of liquidity. We have seen the RBI announce a very unprecedented amount of foreign currency buy sell swap of 10 billion this month, and that's likely to address part of the liquidity shortage that the market is seeing. So these are coming on the back of government's tax cuts and US and also the RBI rate cut also. So there's a lot of macro decisions that's happening in the Indian market, but I think markets are yet to reflect positivity. It could take some time, but I think global cues also will be a part of it. Let's not forget that the sword of Trump tariffs are still hanging over all the countries, as he continues to talk about the reciprocal tariffs, and India will not be spared out of it also. In the midst of all this, rupee is still trading in a much narrower range now compared to the previous week, 86.40 defining the bottom, and around 86.90 being the higher side of the range, where selling interest is increasing from exporters and also longs unwinding. That situation could continue this week as we head into a crucial week of US data and also the European developments. Thank you.
Thank you, JK. So overall, I think from what I get, there's a shift in narrative. We are seeing on one side that US exceptionalism is slowly weakening. Matlab, there are some early signs. We have got the industrial production, services PMI, weak consumer sentiment, all of it coming. The data is not coming out that strong. On the European front, this election may prove to be some green shoots. Euro is reacting positively to the election results, so that will be something which drives the narrative for a few weeks. There's also the positive flows which is coming into China because of the AI related development, and of course, the hawkish Japanese monetary policy. Uh, at least the outlook, because of the very strong data from Japan, both inflation and growth wise, keeping bets of rate hike by the BOJ alive, keeping the yen also stronger. So all of this is playing out together. At the same time, there's the uncertainty of the Trump-related tariffs. So a lot to look forward to this week. Let's see how markets play out. That's it from us today. Thanks for listening. We'll catch up with you tomorrow with a fresh round of updates.